Hey folks, welcome to today's live stream. Oh, let me get this microphone over here. Come here, buddy. There we go. Hi. Welcome to the neighborhood. Let's talk about Bitcoin. Goodness gracious. Okay, let me just power up live stream idea. Beautiful. Let's do this. Hey folks, welcome to today's daily Bitcoin update. Let's pop over these charts real quick, see how everything is doing. So, of course, we're going to do macro down again, starting on the daily. First thing to notice, we are still trading laterally as defined by our compressing periods. Our volatility overhead slowly radiates upward into the higher periods. So, given what we're seeing now, we're probably just going to get more lateral trading. Again, I still think a retest of the weekly 200 moving average is likely before more subtle compression and lateral trading. Okay, it's not going to be a very exciting year. Okay, I keep saying that, people keep on disagreeing, but it's just the way things are going to go, my friends. All right, we're directly on top of an institutional benchmark. The end of a crash pattern is typically denoted by a period of reduced price volatility and volume. All right, guess what we're seeing both of? A period of reduced volatility, right? Small little candles, and consistently decreasing volume, goodness gracious, on top of an institutional benchmark. Guys, these are the three conditions to signal the end of a crash pattern. And the fourth signal to end a crash pattern is no volatility overhead, completely compressed distributions to allow for new upward expansion to create new trends. Okay? Really, guys, the importance of volatility theory here is so important. You need the compression of these long-term periods where everything is just going to go sideways to allow for all these distributions to settle up. Okay, they're going to pay their tab. Everything's going to return to the center of data. You're going to get a nice compressed range, and as soon as nobody cares about Bitcoin anymore, well, that's when we'll see our positively weighted mean period volatility on the daily chart, right? Where the 50 band is above the 200 band. Guess what happened the last time the 50 band was on top of the 200 band for Bitcoin? Well, we were having a bull run, okay? Right? Because when your short-term distributions are weighted positively above your long-term distributions, that is the sign of trend. So, given what we currently have here, well, we had a nice period of trend through this downward action. As soon as our 50-period band started to compress, it denoted the end of that relative trend and reversion to that relative 50 moving average at this location, right? Return inside the 50 band, we get an upward reaction to the 50 MA, and now we are compressing as defined by the 50 band. So guess what's going to happen when we re-enter the purple band? Same thing that happened in the blue band. We will trade laterally as defined by the purple band. The purple band will compress. We will revert to the purple band's mean. And then all this beautiful, nice compression will take us sideways directly on top of our 200 weekly moving average and allow for the compression of all these periods so that mean period volatility can be properly weighted to the upside without the excessive application of unrealistic force. Okay? Right? Because if we have rather thin, cute, easy to manage distributions, then it's going to be very manageable to actually cause upward trend. As long as we have this downward expansion, right, or at least this new compression that we're starting to see, we're just going to get lazy sideways trading. So with this in mind, let's take a look at the 4-hour chart, see how this is going. Probably going to be just as boring, my friends. Absolutely. Again, we're still just expecting a retest of our weekly 200 moving average. Let's load up the proper indicators so we can see that. My scripts, weekly MAs anywhere. Perfect. And just allow me to change the period to weekly so we can understand that benchmark as defined by the 4-hour and 1-hour charts. Beautiful. Zoom in a little bit further, drag us down. Perfect. So we have that nice little pink hairline down there, which is going to represent our weekly 200 moving average. And do excuse the lag, 3D Wave PM is notorious for ruining TradingView's lag. So, goodness gracious, here it is. this little hairline right through here. Okay, that was terrible. Let's try that again. This beautiful little hairline right through here. Perfect. Any kind of downward expansion that we're going to see here is going to be best handled by a retest, several small bounces, and then lateral upward trading. Beautiful. So if we go to the 1 hour chart, we're probably going to see more of the same, right? We're getting that short-term mean reversion. Okay. Let's take a look at the 160 period because it's the longest overexpanded period. We'll snap that into the purple band and see how this treats us. Beautiful. Oh, goodness. Look at the size of that wick. This is going to be very exciting, folks, right? Because when we're in an overexpanded band, we will trade laterally as defined by that period until its reading is below the 0.7 value. Goodness gracious. This could not get any more accurate, right? First, we initially see our mean reversion to the 200 MA. We run down. We test once, twice. And now, guess what we just tested on the upside? The top edge of that band. Why? Because we need to expect lateral trading as defined by a longest overexpanded period, right? We're just going to get this lateral motion inside this purple band until its reading is no longer red. It appears volatility overhead is now gone. So technically speaking, even though this band is significantly compressing and we can expect lateral trading, it is technically possible for a new trend to begin outside the band. So this was probably our last range trade we could have taken on these three locations. Now it is going to be a bit of a no man's land during the rest of this compression as new trends are going to be trying to start through new periods of high price volatility as mean period volatility attempts to weight itself either to the upside or the downside. If the slope of probability volatility does not agree with the direction of trending, price volatility will be high at those relative key pivots. Okay? So, bit of a no man's land for trading right now on Bitcoin as our range has finally collapsed, right? I mean, if we hide these indicators, sure, Bitcoin is still technically in the range. However, based on the signs of compressing probability of volatility, it is less than hopeful that we're going to stay in this range. All right, that's it for today's idea. It's been a pleasure. Okay, doke. Hi, folks. Okay, let's do XLM, and then I'm going to pop into the other comments, see what you guys want me to do. Okay? Goodness gracious, trend is still defined. 14 period CCI roll. High risk, right? Trend is still very much defined in the downward direction. And we are tagging that 3.2 standard deviation. So, I mean, this 14 period CCI is rolling up. Yeah, potential for a long position is there. It's just going to be very risky. Let's see if we can identify some mean reversion pivots down here. Okay, convenient enough, 250. Okay, the signal to watch for, the 14 period CCI roll, the 14 period Wave PM roll to the upside, generating new upward expansion. I would here, there was some initial buying power from the tag of the 3.2. And now we're getting some really tight. Yeah, with all this compression we're seeing here, there is going to be a good potential position. There's just no true signal other than on the daily CCI, or I'll actually call it. However, you know what? Yeah, we can call this. Just from the simplest, right? And then those remaining longer period mean reversions should theoretically topple upwards as well. Yeah, I'll consider it. It's a decent chart. I'm going to set an alert for myself here. Cool. That'll notify me. I got a text message when that hits. What I want to do, I mean, sure, volume's high, but the liquidity isn't great. Okay, compression of short-term periods. Looks like we're trading laterally as defined by the 50. Just from a quad CCI strategy, I mean, wait for the 14-period CCI to roll up. Looks like we are getting sufficient compression here. Could work out in your favor. That's really all I have to say about it. Potential bull flag, just wait for the bottom to roll up. And it's going to be a bit of a good profit ratio. Although, really, because of... It's so hard to have proper risk management down here, I don't want to trade this. Come check out link. Get your comments in there, guys. Come on. To my understanding, at least from what I checked yesterday, trend is still technically defined here. By the 60 period, right? Why are we seeing 60 period mean reversion? I think it's 70 period, excuse me. Yeah, 70. Let's slow that up. Okay, yeah, link is bearish at the moment. Right? Expecting reversion to the 70 moving average, which honestly should just line up with the way this is trending. I did not draw that trend line very good. Let's do that again. There we go. Yeah, it would make sense if we were traced down to that value. Oh yeah, thank you for watching the video. Make sure you hit the like button and subscribe to my channel. It would be incredibly helpful to get your support. Cool. Let's check out. Hold on. I need to send a text. What was I doing? God, sorry. A little distracted. Silver. Yeah, great days. Any particular ticker you want me to look at? What exchange are you on? Granola. Ooh. Yes. Hi, Red Pill. You know, back when the Matrix was still cool, and before, there was a terrible Reddit group. My Yik Yak username used to be the Red Pill Blues. Right? Like, as if you're sad about being woke. It was pretty clever. I was in college. It was a while ago. But lo and behold, then it becomes like that whole Reddit movement, and then it's a bad thing. And then after that, like, I can't use it anymore because it's associated with something else. And then after that, Maroon 5 releases an album with the same name. And I'm like, are you kidding me? And it was ridiculous. It was pretty funny. Okay, yeah. If you can you briefly explain what are you trying to do with your indicators? Sure. Everything on this chart is simply a derivative of Bollinger Bands. Okay? Everything on this chart is just a Bollinger Band. All right? Obviously, the Bollinger Bands are Bollinger Bands, set on the 1.25 standard deviation. They measure the expansion and compression of a distribution, right? If a distribution is expanding, it defines trend. If it's compressing, it defines lateral trading for that period. It's very important to note that the actual percentile deviation of any standard deviation you measure is particularly irrelevant due to the nature of dynamic distributions in the market, right? Every time a candle closes, the percentile deviation is going to change, meaning, if you're tagging the third or fifth standard deviation and it contains 99.9997% of the data, it doesn't matter because it can continue expanding, right? If you check out Bitcoin on the daily chart, BTC USD, right? If you actually load up the fifth standard deviation on, say, the daily, which I'm not going to do because it would take a second, it actually tags the fifth standard deviation, right? And it keeps on going up. That's because the percentile deviation doesn't matter. All that matters is the expansion or compression of the distribution. Sure, if you re-enter some standard deviations, say like the 3.2, it can be a benchmark for potential take profits, but that's another story. CCI is simply a mean absolute deviation representation of a Bollinger Band. I use it to save space on my screen and to get accurate representations of trend and entries using the 14-period CCI. Wave PM is an expression of the distributional width of a certain period, right? How wide that Bollinger Band is, right? And then it's set on a scaling value from 0 to 9, 9 being the most overexpanded, or 1 being the most overexpanded, and any value over 9 is technically counting as overexpanded. Something with too much mass, right, would require an increase of force to move. Force equals mass times acceleration. The more mass you have, the more force is required to move it. So the more mass something has, the more likely it is going to trade it laterally because, well, I already explained it. And then, this is really cool. Right? Look at this area where we have no mass. Everything's below the 0.7 value. Well, it didn't take all that much force to get a move greater, or rather a greater percentile move than, say, the bull run. Well, because there was no mass and it didn't require all that much force in order to move price, right? So when you have that kind of net expansion, that results in net trend. Okay? Then 3D Wave PM is the same thing as regular Wave PM, except it's a heat map representing the zero values from 0 to 9. Except it's every single period. Well, 32 separate periods, not every single period. And there are versions of 3D Wave PM that we've made that increase the resolution, right? So it's, say, if we look here at the 150 value, and we notice that it's orange, that means it's between the values of 0.7 and 0.9, okay? And so on. So you can actually get a bunch of data by just looking at 3D Wave PM. And I have traded in the past just for fun, using nothing but Wave PM, CCI, and 3D Wave PM to quite some success. Okay, you can purchase these indicators on a subscription. Go ahead and check out the links in the description to actually gain access to what I'm doing here. To my understanding, there is very little other resources that give you this kind of fundamental understanding of actual movement in the market, right? A lot of typical resource information, lagging indicators, breakout patterns, they're all derivative information simply based on the compression and expansion of distributions. It's pretty fascinating stuff. Really, if you actually want to learn more about this stuff, I do have a course as well that you can check out in the links and purchase as well. Ooh, and a cat with chart says, and we're launching Compression MA soon too. Yeah, I'm going to leave it on him to actually describe that. He recorded a video. I need to upload it on what's actually happening there. Okay. XAG, GBP. Okay. Oh, you said I wanted to. Hold on. Did that answer your question? Oh, this looks okay. High price volatility at key pivots due to the lack of definition on the trend. Okay. So we're actually just getting some lateral drop directly on that band. Probably going to flag out to allow the compression of short-term distributions. Sure, this downward channel does appear to be broken. Let's go to a more macro time frame. Let's try the weekly. I mean, everyone wants to say it. It's a breakout from a falling wedge. I don't believe that, though. Forgive me, there is not enough bullish confirmation to recommend a late entry. There was the Wave PM cross with the upward weighted CCI periods to allow for an entry maybe 4 or 5 weeks ago. However, due to the fact that we have neutrally weighted periods of CCI, a lot of compression across the board, really any kind of net expansion I'm not too confident about, especially with all this volatility overhead still working its way up. It's a muddy chart and I don't want to trade it. Sure, there might be some scalps on the shorter time frames, but I don't want to go into it. BSV BTC, that's one I don't hear often. BSV BTC. Ooh, a downtrend. Yeah, leave this alone. You should just be able to look at this kind of chart and then say, okay, time to be on my way. You have no reason to trade this, right? The trend is defined down. I guess there could be a short-term mean reversion. Sure, let's check out 80. The 80 period. Now, we haven't crossed the 80 period pivot, so let's define that real quick. Maybe we have. Okay. I stand corrected. Sorry. God damn it. Okay, yeah, there is implied mean reversion. It's only 6% though, and I think it's going to be more likely we get lateral mean reversion over trending mean reversion. Really, I don't recommend betting against a trend like this unless the profit ratio is really good. Honestly, due to the slope of this downward band, it is possible for price to trickle down and then sideways, so there's really no good risk management to enter this trade anyway. Yes, it is going to hit the 80 MA before trend continuation. Just how, I don't really have a good answer for, and that doesn't make for good trading. Okay. Okay, that was fun. I'm going to be done now. Like and subscribe. Subscribe to PewDiePie. I don't know. You guys have a wonderful day. I'm going to go outside. It's going to be good. Bye, guys.